Well, hello, everybody. Welcome back to part four of Regulatory Ethics. My name is Allison McLeod, and I hope that you had joined us for the earlier three sections of this, as I know that many of you have to have your ethics requirement for licensing purposes, but we certainly are happy that you're back with us. And so hopefully we're going to have a terrific time with this last hour of regulatory ethics. And there's a variety of important concepts that CPAs have to deal with every day as we deal with ethical dilemmas. And this is going to be no exception of the responsibilities that we have to the profession. So, just a little bit about myself. If you've not joined us for the earlier seminars, I actually at this moment teach full time at a large 4-year university north of Dallas. But I and the topics I teach basically are a variety of tax topics, such as in various times in my teaching career, I've taught individual income taxes, corporate income tax, multi-jurisdictional tax research, and of course, I teach ethics to our graduate program, and they fill out my schedule with financial accounting. And so, plenty going on there at the university level. But prior to becoming an academician, I was actually a practitioner for nearly 20 years. Right out of Baylor Law School, I went to one of the big four firms here in Dallas for 2 years, and then after that went on to a large, at one point was a Fortune 50 company, a large retailer, and worked in a huge tax department. I was in tax planning and IRS audits was my specialty, and then left the retailer after 13 years to go to a large international cement manufacturer as for promotion to director of tax planning and IRS audits and international tax planning, and unfortunately made a bad career choice and joined this cement manufacturer in 2007 time period. And unfortunately, we all know what happened to the building industry, and so was fortunate to be there for 3 years before really just the bottom fell out, and lots of people got laid off out of this company because of the drop in sales. So then that caused me to go into academics. And one thing I've done since I have been in academics for a good number of years now was I began teaching ethics to CPAs, and it's really been very I guess, refreshing in the sense that, when you're in an academic environment, you are somewhat insulated and you deal with these hypothetical case studies and everything like that. But when you teach ethics to CPAs, it reminds you that your struggles and your challenges and the ethical things that you deal with on a day-to-day basis are extremely real, and they're right in your face. And, a misstep could cause you to go completely the wrong direction and cause permanent damage to your career as an accountant. And the one thing about being a CPA, as we'll be talking about, is that you can have, this is the type profession that judgment is everything, and inherent in the job is good judgment. Excuse me. And so if a CPA, as we've seen in other case studies that we've talked about in our other three sections, a CPA can be a terrific individual, a good-hearted person, as regular as the day is long, and can make a momentary bad choice, a momentary lapse in judgment, and it had permanent consequences to the CPA's career. And in some cases, it's a permanent suspension, and basically they can no longer be a CPA. And we've talked earlier about how there are lots and lots of jobs out there where you don't have, for instance, inherent in the job is not good judgment. There's a lot of people who display terrible judgment in a variety, in many aspects of their lives, but yet still get to keep those jobs. We have seen, in the news recently, crazy things done by Hollywood actors, right? That where there's been some very questionable choices made by individuals who have been in the media, yet they are able to continue to keep their jobs, and not just Hollywood actors, but a variety of other professions. my husband is in marketing, and he says, in his career, crazy stuff has happened in marketing all the time. Yet, it seems that those folks have 9 lives, and they keep coming back and keep coming back. And so, but CPAs, it is very different, and we wear a heavy mantle of responsibility. Not only do we have a responsibility to the public of good judgment and due care and competence, and really just doing a good workmanlike job in serving our clients. But the other thing too is the other mantle we wear is that we have to show good judgment in even our personal lives. That we have to, if we do something crazy in our personal life that is a very bad choice, well, that could necessarily disqualify us from being a CPA, or doing something that's considered what's called an acts discreditable. Okay, and that's doing something just as it sounds. You do something that's a discredit to the profession, and the CPAs have a reputation to protect, and they will flush you out. So anyway, so the things that we're going to be looking at today is being able to identify when an ethical conflict can occur and how to resolve that in practice. And secondly, we're going to be looking at how do we define the term acts discreditable, exactly what is it, and how these actions can adversely affect a CPA's reputation and ability to be licensed. So that's kind of what we're going to be looking at today. So, and we have a number of case studies that I want to go ahead and look at as well to illustrate these particular points. Okay, so obviously, CPA has several sources of that tell us what our practice standards are, but the one that we're going to be focusing on most today will be the AICPA Code of Professional Conduct. Okay, and even if you haven't paid dues to the AICPA, you are still beholden to what it has to say because it's a national standard setting body. And so, one thing that I appreciate about the AICPA Code of Professional Conduct is when it was re-released at the end of 2014, beginning of 2015, that they really kind of restructured how they wrote the code. To be sure, there's still some rules, a variety of rules in its like what nearly 200 pages of text that they put onto that. That say do this, don't do this, sort of black and whitish kind of rules. Okay, and they give a variety of examples of what is good behavior and what is bad behavior. But more importantly, I think that they go ahead and spend some time giving us aspirational language of what a CPA needs to look like. Okay, we need to be honorable, we need to be honest and candid, and they say this, and it kind of brings into sharp focus what a CPA needs to do. We have to go ahead and measure our behavior with are we being honorable? Are we being candid? Are we showing due care? And are are we paying heed to the fact that our basically our quote unquote customers, the people that we need to serve, is not just our client, not just our employer, but the business community at large, who depend on us to fairly state the financial condition of clients, and also to fairly administer the tax laws. So there's I appreciate how they say it and what they have to say, and in that context, I think that we'll find it quite illuminating as we're trying to figure out what is the right thing to do, what is the wrong thing to do. So, what exactly is an acts discreditable? Well, they don't necessarily, the code doesn't necessarily say an acts discreditable is, when you do something really terrible and it embarrasses the CPA profession. But that's actually what it is. They do give examples of what an acts discreditable is. So let's go ahead and take a little example here of what is an acts discreditable. Well, here's Catherine. She was engaged to prepare Henry's tax return, but despite the fact she had had the client's information for some period of time, she had not sent Henry his final return or returned his many phone messages and emails, even though the final extended deadline has passed. So, Catherine can be cited for committing an acts discreditable. In other words, just not treating your clients properly is an acts discreditable. Not returning phone calls within a reasonable amount of time and without good cause is an acts discreditable. And clearly, some of the bigger items, that we see, like for instance, I mean, it's kind of a no-brainer. If you commit a felony, then that's an acts discreditable. If you sign a document like a financial statement or a tax return that you know for a fact there's some false information in it, or you allow somebody else to sign a tax return or a financial statement that you know is incorrect, or you even know that there's some uh, information in there in the books and records that is incorrect, and you have the ability to change it, and you don't do it, well, that's an acts discreditable. So, it's a broad ranging, there's a wide definition of what an acts discreditable is, but I think we all, you know, you just have a sense of, well, have I done something that's, you know, embarrassing to the profession? Is it something that sullies the reputation of being a certified public accountant? And if the answer is yes, then of course I think you conclude that as an acts discreditable.